Super low cost Vanguard index funds or ETFs across the board, pretty much no matter what you choose, historically have been pretty high quality investments that match exactly what a lot of dividend growth investors out there are looking for. But because there's so many to choose from, and because again, all of them pretty much offer a lot of good and very little bad, it's sort of confusing to know, especially if you're a newer investor, which one should you buy into, which one is the best for your specific strategy, and which is going to cross off all the needs that you're looking for. Well, in this video specifically, we're going to go over and dig into three of the most popular, three of my favorite Vanguard exchange traded funds. We're talking about VIG, the Vanguard S&P 500 ETF. We're also talking about one of my other favorites, VYM, or the Vanguard High Dividend Yield ETF, and one of my newest holdings that I just mentioned as of recently, VIG, or the Vanguard Dividend Appreciation ETF. We're going to talk about each of these ETFs, how each of them work, what they have to offer, and then towards the end of the video, we're going to compare them, stack them up side to side, and see which is the best Vanguard ETF across the board in an attempt to answer that question once and for all. So if you're a long-term investor that's sort of been on the fence about buying into one of these Vanguard funds, but wants to learn a little bit more about them, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, looking into VIG, one of the most popular, I'm sure even if you're a newer investor, you've heard this one talked about before. VIG is the Vanguard S&P 500 ETF, which has an expense ratio of 0.03%. Now that's what really makes some of these Vanguard ETFs magical, is the fact that you're getting exposure to a high quality, time-tested strategy, but you're barely paying anything to do so. Now it says right here the performance as of right now for VIG, the year-to-date returns right now is around 15.17%. So there's a good reason on why VIG and other these Vanguard ETFs are so popular. It's because the performance speaks for itself. Now it says right here under product summary for VIG, invest in stocks in the S&P 500 index representing 500 of the largest US companies, and the goal is to closely track the index's return, which is considered a gauge of the overall US stock returns. Offers high potential for investment growth, share values may rise and fall more sharply than that of bonds, and more appropriate for long-term goals where your money growth is essential. Now, another thing that's important, especially for those investors out there that are interested in dividends or income potential, the current yield for VIG is right around 1.26%, as you can see right here. Now, that's an important distinction from the other Vanguard ETFs that we're going to talk about. VIG doesn't offer the largest dividend, but of course, that's because this ETF tracks the S&P 500, and of course is going to have exposure to much more growth, at least historically it has. So that's one of the main things to ask yourself, especially if you're sort of on the fence about which ETFs you really want to have exposure to, which ones you want to buy. You want to ask yourself what stocks, what sectors actually make up the ETF. Because if you want exposure to more dividends, if you want exposure to more income versus growth, you're probably going to want to invest in other ETFs, etc. Now next, digging into VYM, the Vanguard High Dividend Yield ETF, this one also is very popular for good reason. It says right here in product summary, seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. So right there, you can already see that VYM versus VIG, this ETF is going to have a little bit more emphasis on dividends, on income, etc. It says provides a convenient way to track the performance of stocks that are focused to an above average dividend yield and follows a passively managed full replication approach. Now, just for context, when it comes to VYM, the yield as of right now is around 2.71%. So more or less almost double the starting yield that you're going to get when it comes to investing into VIG. But of course, this is because VYM has a different portfolio breakdown. It has different exposure to different sectors and of course individual stocks, which aren't necessarily going to give you as much growth per se, not necessarily at least, of that of VIG, but are going to give you a lot more cash flow from day one. So again, that's something to ask yourself if you're looking for a little bit more exposure to cash flow versus growth or vice versa. All these different Vanguard ETFs offer different things, although for the most part, even with a 10 or 11% year-to-date return, you're probably going to get pretty rich long-term if you invest in any of these, at least historically, investors have. Now, last but not least, the last Vanguard, one of my favorite Vanguard ETFs I want to go through is VIG, or the Vanguard Dividend Appreciation ETF. Now, this ETF, just like VYM, has an expense ratio of 0.06%, so it's very cheap to own like all of the Vanguard ETFs for the most part. Now, year-to-date returns for VIG is around 11.4%. So whether you made around 11%, 12%, 15% per year, regardless, any of these ETFs have performed amazingly. Again, especially long-term historically. Now, digging into the product summary for VIG, it says seek to track the performance of the S&P US Dividend Growers Index, passively managed full replication approach, fund remains fully invested, large cap equity, emphasizing stocks with a record of growing their dividends year over year. So not only is VIG going to be focused on dividend paying stocks, dividend paying companies, which is going to give you as an ETF holder exposure to more cash flow, of course, but also VIG is going to focus on different companies, different stocks that have a record of growing their dividends, which is basically searching out for different companies that have had nice dividend growth to pay you more and more in dividends year over year. And side note, that's one of the main reasons on why I decided to start buying some VIG as of recently. I really want to build a long-term portfolio that's not only going to pay me dividends, but I want more and more cash flow as the years go on. Now, VIG is offering around a 1.7% yield, so it's a little bit higher than that of VU, not as high as VYM. You are going to get some exposure to growth, but also a little bit more exposure to dividends and dividend growth ongoingly when it comes to VIG, which is why, like I said a second ago, this ETF matches basically exactly what I'm looking for. Now, here's where the real magic is when it comes to VIG, and this is more or less the main reason that I wanted more exposure, is because I want more exposure to some of the names, like I said, that not only are paying a massive amount of dividends ongoingly, but also have a little bit more growth potential. Now, even though VIG is pretty heavy with Apple and Microsoft, two ETFs that I already have a lot of exposure to, and that's whether it's holding Apple or Microsoft on their own and or have exposure to both these with ETFs. I still am super bullish on both of Apple and Microsoft, and more or less the entire top 10 holdings of VIG. It's just a really good mix of dividend growth names, but also names that can move up in price very, very quickly, and of course can move down a little bit quicker, and that's just because the general beta of all these names, more or less. So now that we went over some of the basics, at least to give you guys all an idea of what VU, VYM, and VIG, all these different super high quality Vanguard ETFs have to offer, I promised that I was going to share with you guys exactly the total return or try to answer the question which of these ETFs are best to hold on to over different time periods. Now, if we were to stack up VIG next to VU, next to VYM, and use total return as the metric, so this is price return as far as growth goes, but also dividends included, over the 1 year time frame, VYM has returned 15.3%, VIG 19.8%, and VU 23.1%. So on the 1 year time frame, even though, like I said earlier, all these different ETFs have had some massive returns basically forever historically, VU still wins on the 1 year. Now, in the 5 year time frame, it's basically more or less of the same. VU still wins on the 5 year with 28% return, VYM number 2 with 24%, and VIG with 23%. Either way, though, over the 3 year time frame, not bad whatsoever, although VU, of course, takes the lead once again. Now, in the longest time frame, this is where it gets crazy. VU has significantly outperformed VIG and VYM, although still, I would be more than happy to hold on to any of these. VU has over 109% total return, VIG 81.5%, and VYM 72%. So again, I repeat, all these different ETFs are popular for a reason. They have great performance, great strategies, and a great basket of holdings. But at least historically speaking, VU has pretty much outperformed the rest, which is why VU is so popular, especially in this small basket. So now that we talked about some of my favorite and some of the most popular Vanguard ETFs across the entire market, especially for longer term investors, VU, VYM, and VIG, I lastly, most importantly, now want to hear from you guys down below. If I were to ask you to pick one of these ETFs and say that you could only invest into one of these forever, which one would it be and why? VU, VYM, or VIG? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.